You're now listening to the Tax Smart REI podcast, the #1 tax podcast for real estate investors. Hey, thanks for tuning into this week's episode of the Tax Smart REI podcast. Today, we're joined with Isaac Fishman and Heather Lucor. They are FinCEN Filing Agents, and we're going to be talking about the 2024 Corporate Transparency Act. And believe it or not, there are some things you're going to want to know if you do own LLCs or other entities as we head into 2025. So even if you know what the CTA is, you're definitely want to stick around, and this is something you're not going to miss. And we're going to dive into all of that in just 1 minute. Are you ready to prepare for 2025 with strategies that will save you money and optimize your real estate portfolio? Hall CPA and Tax Smart Investors is bringing you the Year-End Tax Impact, a one-day virtual event where it will be equipping you with the tools you need to finish the year strong and dominate the year ahead. At this event, you'll hear from top industry experts on essential topics like how the post-election results will shape your investments and your taxes. You'll also discover wealth-building strategies designed for 2025 and beyond. Plus, you'll learn year-end power moves so you can optimize your taxes before the clock runs out. And for our VIP investors, you'll get exclusive access to a tax strategy panel and even a live Q&A where you get answers to your most pressing questions. If you're an individual investor or small partnership, this event is specifically tailored for you. And the best part, no travel required. You can join us from the comfort of your own home via Zoom. Don't miss out. Reserve your free ticket now by visiting www.taxsmartinvestors.com/year-end-tax-impact and arm yourself with the strategies and insights that could save you money, time, and a whole lot of headaches. With over 500 investors expected to attend, this is your chance to connect, learn, and prepare for a prosperous 2025. Again, just head over to www.taxsmartinvestors.com/year-end-tax-impact to grab your free tickets today. We'll see you there, but for now, we'll dive right into today's episode. All right, and we're back. So Isaac and Heather, welcome to the show. Would you be able to give us a quick breakdown of who you are, what you guys do, why you do it?
Sure. Thanks, Thomas, very much. So what I do want to say first and foremost is wanted to give a little disclaimer. Isaac and myself are not lawyers, and the advice that we give or the information that we provide should never be interpreted as legal advice. With that, I'm Heather Lucor. I am the CEO of FinCEN Filing Agents, and
I'm Isaac Fishman. I am the sales manager and product specialist for our CTA solution at FinCEN Filing Agents. And it's a pleasure to be here. Thank you guys for having us. I appreciate it.
Absolutely.
And FinCEN Filing Agents is a company that came around at the beginning of 2024. It was incorporated. We are a sister company to Edgar Agents. And Edgar Agents is a company that has been around for 16 years. And their main focus is compliance filings. Albeit they do it with the SEC, but who better to understand all of the regulations, all of the legality, what you need to do when you have to do regulatory filing. Hence, FinCEN Filing Agents, Edgar Agents' sister company, was born.
Absolutely. Someone needs to help sort out this entire 2024 Corporate Transparency Act because we do get a lot of questions on it. So I'm sure there'll be a lot answered here today. So I know for all of our listeners, I know we did touch base on the Corporate Transparency Act before, but for those who may have missed it or just need a refresher, what exactly is the Corporate Transparency Act and kind of why was it introduced in the first place?
So yeah, the Corporate Transparency Act is it's here to combat financial crimes such as money laundering, terrorist financing, tax evasion, and other criminal activities. Just by increasing transparency around business ownership, they're specifically meant for small to medium-sized businesses. Nothing large, no publicly traded companies or anything like that.
And why it was introduced is really around that lack of transparency. The Department of Treasury, the IRS, really doesn't understand or have a directory of beneficial owners for these reporting companies. And money laundering, it's a real problem out there. We know that in 2023, there were 64,000 cases reported to the U.S. Sentencing Commission. And of those, 1,132 were attributed to money laundering. And at about $500,000 each, you do the math.
So it makes a lot of sense. Seems like this was put in place to prevent financial crimes. It makes sense that FinCEN would be the reporting agency for that. So what types of entities are required to come under the purview of the Corporate Transparency Act? And are there any exemptions to these entities?
That's a great question. And most people think that it's solely domestic entities. However, it does include foreign entities that have filed for formation or registration with a U.S. state. And it also includes Native American tribes, unless they meet one of 23 exemptions that FinCEN has highlighted.
23, that's a lot of exemptions.
It's a lot of exemptions.
The main, I guess, three exemptions really being if they are over $5 million in annual revenue, have over 20 employees in the States, and have a physical office in the US. But some others being like publicly traded companies, like I said, tax exempt entities, banks, credit union. There is a list of 20 to 23 exemptions on the FinCEN website that you could easily access as well.
Got it. If I'm a real estate investor, say I have an LLC with a handful of rental properties, or perhaps I'm in a partnership with a number of other investors who are investing in real estate, this is most likely going to impact me.
Yes, there are no specific exemptions to real estate investors. They're treated like all other small business owners.
Moving into the actual reporting requirements. So if you're a real estate investor or small business owner, you have an LLC or an S corporation, you're most likely going to have to file this. What are the requirements? What do I have to do to make sure that I'm in compliance with the CTA?
So a FinCEN filing, it's a very simple filing. It's 51, I believe, basic fields. But specifically for the reporting company, it includes a company's EIN number, the company's full legal name, any trade or DBA names, their business address, and things like that. It's very, very simple. I would say most owners could answer those questions pretty much off the top of their heads, I would hope. And for the owner's information, or for the company applicant's information, you need, anything that's on a regular driver's license, like first and last name, ID. The picture of the ID is actually a mandatory field. The driver's license number, the address, and I think that's about it.
Seems like it wouldn't take that much time to fill out, like you're saying, especially if you're just a sole owner of an LLC, or maybe you do have, like Tom said, a couple partners in your LLC. It doesn't seem like it's that extensive, but I can assume that one person is probably filling out or gathering all this information. And if you've got to actually get pictures of driver's license, it's probably like, what? Why do I have to send you my driver's license? Is that true? Like, sounds pretty simple if you've just got a few partners and yeah.
Yeah. I mean, exactly. At the end of the day, if you're working off of some sort of platform that's going to be easy to use, the most time consuming part, I would say, is actually connecting with those owners. Yeah. And getting those documents and having to deal with them.
Yeah, most of our current customers, they have most of this information already in their accounting systems, but they don't have that physical ID card. And so that's what really layers in some of that complexity and creates the time necessary to do this.
Yeah. But I mean, it also does sound simple to do, but at the same time, we're seeing and we're hearing that clients or people, LLCs, are taking 45 minutes to do a filing, which, it's 50 basic fields. It shouldn't take that long. So, it just gets tedious on that FinCEN website.
And one thing that we've done with our platform is we've recognized that this is a challenge. And for those that, maybe they're one person going in and using the FinCEN website, when you go in and access that, you have to have all the information in front of you and do it at one time. And if you do need to stop or you get interrupted, you have to start again. That's why with our platform, you can save your information and you can put in the information that you do have. And we've added an invite owner feature so that if you don't need to, it makes it so you don't need to go out and ask the owner for that ID card. You can simply send them an email inviting them to enter the platform. They can upload with a simple cell phone picture their image of their ID and send it back. So it really helps with some of that personal information security. And there isn't that transfer of these identification documents or the need to go in to an accountant or somebody else to have them physically take the image of the card.
Yeah. What are some of the penalties for maybe someone who's not compliant with the Corporate Transparency Act? And is there a way for kind of people to avoid them other than maybe getting it done in time? And maybe that's a part of what we remind people of too here as we're talking about this.
Well, let me tell you, they're not messing around.
Yeah.
There's civil penalties and criminal penalties. And the civil penalties are up to $591 a day that the violation continues. The criminal penalties are a $10,000 fine and up to 2 years of imprisonment. And that's if you willfully have been informed that you need to file and ignore it. There is a disaster clause that we could talk about, but you'll have to edit this part out.
So we know there's some penalties there, $500 a day for noncompliance. And if you intentionally disregard it, it seems like there could be some criminal penalties there as well. What are the deadlines that owners of LLCs and other entities need to be aware of so that they are in compliance and that they don't have to perhaps face some of these penalties?
The deadline is January 1st, 2025.
And that's for existing entities?
It's for existing entities. If you are a new entity and you are just incorporating, you actually do have 90 days in order to file your initial filing. That's for new entities.
Wasn't the 90 days for essentially any entity who started in January 1st, 2024 through December 31st, 2024, but if you were started before, or call it December 31st, 2023 and before, then you have until essentially January 1st, 2025. Is that right?
That's correct. You've got it.
And just a little addition, if an entity was created in 2025, they then have 30 days to shorten as well. And updates also are 30 days to do.
All right, so kind of just to summarize that for everybody, like high level, right? If you're out there listening, if you had an LLC that you opened prior to 2024, so at that point you have until January 1st, 2025 to file your BOI reports. If you open one after 2024, then you have 90 days to file. And then starting in 2025, that 90-day grace period is kind of over, and now they give you 30 days moving forward starting in 2025.
You got it.
That's a tight timeline, and those penalties are harsh.
It is. And I'll tell you what's a little unnerving is that at the beginning of the year, there were 32.5 million reporting companies that needed to file. And to date, only 5 million have filed. So again, I said it was unnerving, but there's a significant amount of companies out there who have yet to file their initial BOI filings.
Why do you think that is maybe? Like why 5 out of the 32? Because I have to do this. I could tell you my perspective, but I would love to hear maybe from what you guys are seeing and hearing why people maybe are either not doing it or pushing it off, whatever it is. Like, why do we think there's only 5 million filed?
Well, I'll go first and then Isaac jump in. So when this first came about, there actually were legal aspects. And I think a lot of business owners, a lot of people were sitting back and watching to see what the outcome of some of the legal court cases would be. What we're seeing, though, is that recently there were some developments, and it does not look like the court case will be overturned. What we also see is that there are states now adopting state-level BOI filing requirements. And so Washington, D.C. was the very first, the district, and they actually adopted and instituted in 2020. The national with FinCEN instituted for this year, and we see the state of New York actually has adopted the regulation, and they are implementing a state-level requirement come 2026.
With the end of 2024 right around the corner, now's the perfect time to start planning what moves you're going to make to optimize your tax situation before the year ends and get a head start on 2025. Whether you're looking to use the real estate professional status, the short-term rental loophole, cost segregation studies, 1031 exchanges, or anything in between, our team is here to help you through proactive tax strategy and planning, painless tax filing, and streamlined bookkeeping services. After helping thousands of investors save millions of dollars in taxes, we want to help you. So whether you're looking to finish the year strong or get a head start on 2025, what are you waiting for? Head on over to www.therealestatecpa.com/podcast to request a free 30-minute discovery call today. We're looking forward to learning more about your situation and how we can help. Again, that's www.therealestatecpa.com/podcast to request a free 30-minute discovery call. We look forward to hearing from you, but for now, right back into today's episode. I've seen that also in California. There was another one, right, at California too. People already started asking me about that. So I was not surprised to hear that California had their own.
Minnesota is
No,
probably
not
next.
surprising.
Yep. Not surprising by California and New York. But yeah, just like Heather was saying, I mean, we've been to a lot of conferences, tax conferences specifically, and most of the people were just saying they're, at least in the beginning, toward the beginning of the year, they were just hoping and waiting for it to get overturned because they didn't want to have to deal with it. You know, most people see it as a headache, but truthfully, it really doesn't have to be a headache. It could be a revenue opportunity for you in the future and for this year. There's a real opportunity there.
Yeah, and I know for me, I would say I just am putting it off to the last minute, hoping like maybe this court case were to be solved and it would just say, hey, it just goes away. But if that's not the case, I'm probably waiting till the day before Christmas or maybe before Christmas Eve to file that. Because, hey, it doesn't really matter like if it's December 31st, right? As long as I get the information and I'm good to go. Don't take maybe my advice.
Well,
but like,
right. Yeah, don't encourage people to file it at the last minute. Yeah.
We can cut that part if we want.
No, we see a lot of people try to push things off the last minute. You definitely don't want to do that. You want to stay on top of it. You want to be doing things timely because like one time somebody came to me the last day of the year and wanted something done the last day of the year, and they were shocked when the other company that had to be a part of it was not open on the last day of the year, and they were all upset. So. Make sure you stay on top of this. One thing I did want to ask here is, okay, let's say we file our BOI reports. I know you mentioned before that sometimes there's changes that have to be updated for the BOI reports. What are those changes? And can you just confirm that deadline is 30 days to make those changes again?
Yes, it is 30 days to make those changes. And those changes are if there's any sort of change within a company. It might be a beneficial owner was added to a company. It might be a beneficial owner was removed from a company. It might be the beneficial owner even changed their address and their identification got updated. You would have to do an update as well. And just an FYI, like the platform that we do have is we happen to do 50% off, half off on all updates. So it's definitely a help. But anyways, if you fail to report within the 30-day time frame, you'll be penalized just as you would if you failed to report originally, which is that up to $500 a day. Or for civil penalties or $10K total.
Oh, wow. I have an LLC that I have open now that I just moved. When I officially update my address, I'm gonna have to make sure that I file that report. But appreciate the update there. And Ryan mentioned something very interesting, and we do have a lot of listeners out there who are always keeping an eye out for those myths, misconceptions, tax court cases that are out there that might be open. I know there was some court cases around the 2024 CTA and the constitutionality of it. And I know you guys aren't attorneys, and this is not legal advice, but to your knowledge, are these cases, have they been resolved? Are they still ongoing? Or is the 2024 Corporate Transparency Act something that's most likely at this point here to stay, and people should be looking to comply with it rather than wait it out and see if it's actually going to, what's going to happen with those cases?
So all indications are that it is here to stay. It's really difficult to overturn an actual amendment. And that's where this is kind of coming back to. So again, I know a lot of people are hopeful, but it does look like it's here to stay.
Okay. So everybody heard that. All right. Just bonus depreciation is not coming back for 2023. It's tax year. Okay. And it seems like the 2024 Corporate Transparency Act is here to stay. So go ahead and file those reports if you have them due. Make sure you're in compliance with them, because $500 a day or up to $10,000 is not, hopefully, it's not money that you want to pay. So just keep in mind that out there.
Yeah, it's definitely better to be safe than sorry in any case, especially for those who plan to be filing through the free FinCEN website. Just for example, we come from the SEC side. There's a free website for the SEC. It gets shut down a lot. And when 30 million people are trying to file for BOI in December, we kind of expect something to happen, especially because it's the first time or the first year where they have that platform open. So I would recommend, it's better to be safe than sorry.
And that's a good point for those of you who maybe heard what I said about filing late. Just maybe don't do it in December. I should never say that. Obviously, do it as soon as you can. But I just know realistically, some people are going to push that off to the last day because We procrastinate. We are all kind of deadline driven over here in the West. So, hey, I've got a deadline. Hey, I'm just going to look at it just before. But that's a great point. Things could happen, especially on a free website or whatever. There's just so much information. We even see that on the IRS side. So many tax returns get, filed or something, or even like tax softwares can get overwhelmed with just how much information is getting pushed through. So absolutely get that done sooner than later. My next question though would be, as far as like privacy goes, I think that there's been a lot of concerns about that. And that's probably, if I remember right, part of the whole lawsuit that was kind of going on. How can people's information still be protected, right? Like if there's a concern out there, what are we doing about that?
I mean, when you hear about all of the identity theft that occurs today, it is top of mind for a lot of people. And one thing to understand is that with FinCEN, any of your CTA information that you file, so anything that you file in your date of birth, your driver's license, none of that is actually accessible to the public. It is kept behind firewalls, and the government will be able to access that. But the general public, it's not accessible. And one thing to be careful of, though, in this space is because of identity theft, what we are seeing, and FinCEN has even put out some notifications, we are seeing scams. So be careful and be sure that whatever company you're working with, if you're not working with FinCEN, you're working with a third-party vendor, make sure that they are a certified vendor for this type of filing, and, be careful about getting scammed.
Do we know, is there a way where people could validate if someone's certified?
Yes. If you actually go to the FinCEN website, they do have a list of certified APIs, which is the interface into the FinCEN database.
Hey Tax Smart investors, Thomas Castelli here, and I want to let you know that I recently started my own YouTube channel where I'll be releasing weekly videos on tax and wealth tips for real estate investors and business owners, and of course I'll be covering many personal tax strategies as well. But that's not all. I'm also going to be sharing the tips and lessons I learned by investing as a limited partner in real estate syndicates and funds, which you'll only find available on YouTube, and I'll be diving even deeper in Tax Smart insiders. And lastly, in the not so distant future, I plan to cover estate planning strategies for real estate investors, and you'll only find that on YouTube. Subscribe today so you don't miss a beat by visiting youtube.com/@ThomasCastelli or by searching @ThomasCastelli on YouTube. Again, subscribe today at youtube.com/@ThomasCastelli. I'll see you over there, but for now, right back to today's episode.
And maybe one last question on that is that information, so it's going to FinCEN, and I'm trying to remember how all the organizations work of like, okay, who oversees FinCEN and all this stuff, but does that information does that go to some other organizations within the government? Do we know, does the IRS see that information? I can't remember where the IRS sits with FinCEN and all of that.
Okay, so the Department of Treasury is the one who gets the information. However, they are partnered with the IRS. And so, yes, the IRS eventually will have visibility into this information as well.
Got it.
More information being shared out there for everybody. No, I'm kidding. Yeah. So we know we covered a lot here on today's episode. Is there anything that we've not, before we wrap it up here today, is there anything that we've not covered related to the 2024 CTA that would be relevant for real estate investors and small business owners who presumably are coming into or under purview of this act?
There is one caveat, or we've had a lot of weather impact with the recent hurricanes. And so there is a disaster relief opportunity for businesses that are located in those geographies. So if you're interested in that, I highly recommend, or you're in an impacted geography from some of the recent hurricanes, go out and see. You'll still have to file. You'll just have some additional time to file.
Right. There's no dodging it. There's just an extension for you, it sounds like.
Yeah.
So having said that, I know you guys help people make it streamlined and have a better platform than the FinCEN platform. If our listeners wanted to learn more about you guys and perhaps file through your services, how can they do that?
They could easily schedule a demo with me or one of our team members. we'd be happy to show them the platform and show them actually what it looks like and how it could help them and how easy it is to use and how much time it could save them. And we could, demonstrate to them that it's not a headache and it's more of a revenue opportunity for them for this year and the years to come.
Where's the best place for them to find this information if they wanted to go ahead and take this next step?
So I believe we'll be sharing a link for a smart sheet that they could sign up to schedule a demo or group demos that I'll be giving. And, they could ask any questions that they have, and I'll be happy to show them all over the platform.
All right, awesome. So we're going to go ahead and drop the link in the show notes for everybody, but it's www.edgaragents.com. Go ahead and visit that. There's a BOI, I believe it's a BOI tab. You could find out more information, but that'll be in the show notes for everybody. Isaac and Heather, I want to thank you guys for coming on the show today and sharing the information about Corporate Transparency Act with our audience. Everybody out there, that is a serious filing requirement. There are serious penalties. You have the deadlines here. Go ahead, make sure that you file it and don't neglect it. Don't take any chances. Again, it's www.edgaragents.com. We'll drop that into the show notes for everybody.
Thank you so much for having us.
So it was great to have Heather and Isaac on the show today to kind of go through the Corporate Transparency Act. Just for everybody out there who's listening, if you do have an LLC and you are listening to the show, or you have an S corporation or a partnership, you most likely have to file this. And when I say most likely, I mean almost certainly have to file this. So this is not something you want to ignore. I know we covered this on the show before, but as we kind of head into 2025, some of the deadlines are tightening up. And if you did not, or if you had an LLC prior to 2024, you have to file your BOI report, which is your beneficial owner report, to comply with the 2024 Corporate Transparency Act by January 1st, 2026. So you want to get it done before then, right? You don't want to wait till the last minute.
Yeah. And just maybe to mention one last time, like a sense of urgency for people. I think they brought up a really good point of, you might wait till the last minute, like some people, which it sounds like, right? 5 million filed, 32 million to be filed. Don't put this off too long, just to give yourself, one, enough time to gather all the information, but two, then if something were to happen and you're just going through FinCEN, you've maybe got some opportunities to, even if it kicks you out and you lose your information, to gather it and then put it in maybe a time or two, especially if you've got multiple entities, right? We've got several clients that have a whole kind of structure of things going on. So it could take you some time. Obviously, once you've got the information in front of you, it doesn't seem like it'll take a lot of time, but you just never know. And don't wait till the last minute. But yeah, just a sense of urgency for people to do that. It is a requirement still. That court case hasn't necessarily overturned this requirement, so it is still something we need to do. So yeah, I think that's great that they've got solutions. That does sound like there are other solutions out there, but certainly this is a platform that people can use, and hopefully their information and platform is also helpful to people listening. Yeah.
Awesome. So again, their website is edgaragents.com. A lot of our clients will end up using Edgar Agents. So if you're interested in having them handle your BOI reports and you want to log into their platform so you could save your progress and stuff like that as you gather some of your partners' information in some cases, we'll put that in the show notes as well. But thanks again for tuning in, and we'll catch you on next week's episode of the Tax Smart REI podcast. Oh yeah, one more thing before I go. Of course, if you are looking to switch CPAs, you're looking for a real estate CPA firm, we are accepting clients. You can go ahead and request your free 30-minute discovery call at www.therealestatecpa.com/podcast. And of course, if you are a CPA or EA and you're looking for a change, you have tax experience, you love real estate, you want to be part of a firm on the cutting edge, send us an email to onboarding@Hall CPA LLC.com with your resume, your desired position, and why you want to work for our firm. We look forward to hearing from you. And now we'll really catch you on next week's episode of the Tax Smart REI podcast. Have a great one.